Sorry. Welcome back to Bazaar Morning Call, and apologies for that. Some sniffles here, but our entire research team is joining in to give you the list of top 10 stocks as we begin the day. So let's get them on board. Nigel, first up to you. JSPL is what you're looking at.
First up, God bless you, Sonia.
Thanks.
Take care of yourself. All right, let's focus on JSPL. You know, that one should open up in the green. The street was positioned, I was sniffing a good set of numbers, and the numbers are quite good. The EBITDA per ton on the standalone business, well, that was a little bit better at around 12,500 rupees per ton. So that's a little bit better. And one of the reasons was that operating leverage played out. They delivered a volume of close to around 2 million tons, which is a little bit better than the 1.9 that the street was working with, because exports constituted 11% of the mix. In the previous quarter, it was close to around 3%. That's on a quarter-to-quarter basis. And that's why the absolute EBITDA is better. The debt has gone up, but that's on expected lines because they have a big capex plan that's underway. And what works for JSPL from here on, particularly in Q1 onwards, you'll see steel prices have moved up, so that will work in their favor. You have coking coal cost that will dip by around $30 to $40 per ton. And there will be some benefits of thermal coal as well that will flow in. So because of this, the past quarter number was good, and the coming quarter as well could be fairly good. They're focusing more on value-added steel, so expecting the stock to open up in the green. But there was a big deal that was announced post-market hours on Shriram Finance. Abhishek joins us to fill us in with more details on that. Abhishek.
Well, Shriram Finance will sell stake in their housing finance subsidiary, that is Shriram Housing Finance. A transaction is worth about rupees 4,630 crores. Mango Crest Investment Limited, an affiliate of Warburg Pincus, will pick up the stake from Shriram Finance as well as Valiant Partners FDI Limited. So Shriram Finance holds about 83.8% stake in this company, while Valiant Capital held about 14.8% stake in this company. Some of the financials of Shriram Housing Finance is that as of FY24, they had an AUM of about 13,760 odd crores, gross NPA ratio of 1%, net NPA ratio of 0.8%, and they are very well capitalized with CRAR at close to 25%. Now, IFS Securities has written on this transaction. They have a buy recommendation with a target price of 2,850 per share on Shriram Finance. They say that less than 0.5% valuation benefit from the stake sale accrues in this HFC stake sale that they are doing. The deal value Shriram Housing Finance has price to book value of 2.1 time FY25. So the transaction will accrue profits of about 2,350 crores, which will result in 110 basis point accretion to Tier 1 ratio. So transaction should enable Shriram Finance to actually reallocate this capital into their higher ROA verticals, that is vehicle finance as well as consumer finance. Back to you.
Thanks a lot for that, Abhishek. Well, I'm looking at Vedanta. Two pieces of news coming in post-market hours. They're going to be having a board meeting in the next couple of days. That's on May 16. And they'll be mulling some fundraise via the equity issue, whether it's an FP or rights issue as well. We'll have to wait by for that. They're also going to be looking at a dividend payout. So we'll track that as well. So that's why Vedanta is in focus. First piece of news. Second piece of news, they've said that the oil and gas reserves, reserves and resources, that's increased by close to around 19% to 1.4 billion barrels of oil equivalent. So that's normally a tailwind. We'll have to see how much they produce, but for the time being, those reserves going up will be read as a positive as well. So Vedanta is the stock I'm tracking.
So May 16th is when the board meets,
yes.
Right? So
yes.
They're looking at fundraising there. All right. Another stock that everyone's going to be looking at this morning is Zomato. It's really been in the center of attention this last 1 year. But Mangalam, tell us, brokerages have raised their target prices post the earnings yesterday.
Yep, the stock was down about 6% yesterday post numbers, and immediate reaction on the downside, but no real problems with the numbers. In fact, fundamentally, the company is stronger than it's ever been. And more than Zomato, now the focus shifts on Blinkit, and that's what's been driving the growth for the company over the last couple of quarters as well. Management has strong targets for Blinkit as well. They want to expand or double the Blinkit exposure in the next 1 year or so, of which 100 stores will be added in the first quarter itself, while the adjusted EBITDA in Blinkit in the near future will be near zero because of this expansion. On a steady state, the company said this margin could be anywhere between 4 to 5% of gross order value, and increased penetration in Mumbai, Bengaluru as well as Hyderabad alone could increase the GOV for Blinkit by nearly 4 times. And this is music to brokerages' ears. Nomura has said that, they expect quick commerce to clock anywhere between 65 to 99% growth over the next couple of years, with contribution margin of 4.6%. They've raised the target price. Citi as well as Bernstein too have raised their target prices anywhere between 230 to 235 rupees. CLSA too follows. They have a higher target price at around 248 rupees as well. But the final word comes in from Jefferies, where they've raised the target price to 230. The important part is they've said that the easy money on Zomato is now made, and return expectations should now be more modest in the very near future. And that ties in with the way the stock price has moved as well. Over the last 12 months, it's over 200% higher. Not sure whether this kind of outperformance would continue over the next 12 months or not.
Okay, Mangalam, thanks very much for that. That's Zomato in focus. Well, DLF is the next one we're focused on. Sonal is here with details on the numbers from this one. Sonal, hi, morning.
Good morning, Prashant. Well, if you look at DLF's quarterly bookings, it came in at 1,462 crore rupees, which was a dip if we see on a YY and on a quarter-on-quarter basis, also because of a high base. However, it is much lower than the average as well that the company has seen of around 2,000 to 2,500 crore rupees in normalized levels. So that's why I'm going with red on the stock today. And if you see the trend as well, it is a sharp dip if we are seeing it versus the average as well. And it is at an 11 quarter low as well. Cash flows continue to be strong, came in at 1,100 crore rupees, net cash at 1,547 crore rupees. And if we look at the commercial portfolios, P&L as well, that was good. Revenue is up 9%, EBITDA is up 7%, and profits were up 13% as well. Jeffrey says that with no significant new launches in fourth quarter, pre-sales came in at 11 quarter low. Pipeline, however, shows projects worth 36,000 crore rupees in FY25, but they call it a subdued quarter. Okay, thanks a lot, Sonal. So Q4 bookings dip both year-on-year and quarter-on-quarter. Mangalam is back to tell us how Chalet hotels performed this quarter. Mangalam, over to you.
Well, it was a decent show coming in out there. A 24% jump in the company's revenue, closer to 418 crores. The EBITDA jumped by about 20% as well, telling you margins were maintained a little above that 40% mark, 43% this time around. The net profit saw a jump of 125%, but that's largely on account of two factors. One, tax expenses have reduced by about 50%, and secondly, in the base quarter, there was a loss of about 18.5 crores, which was exceptional. So if you adjust for that, even the profit growth would be a lot more in line with the revenue as well as the EBITDA growth. Other details were also strong. Occupancy increased by 2 percentage points. The average room rate increased by about 5%. And if you look at the same hotels that they have, the room rate out there increased by about 8%, leading the revenue per average occupied room up by about 7%, closer to 9,000 rupees. So all these work well for them. They've also raised funds via QIP recently, so should bode well for them.
Okay, thanks for that, Mangalam. Well, let's hop across to Ekta. She's here to tell us about Aarti Pharma. Ekta, morning.
Morning. I expect the stock to be in the green because it was a good operational performance. Revenue was up around 4% on a year-on-year basis to over 500 odd crores, but the EBITDA improved to 117 crores versus 80 crores year-on-year, and margins of 23% versus 16%, and a profit of 65 crores versus 43 crores. On a Q-on-Q basis as well, there was an operational improvement, 23% compared to 21.3% in terms of margins. Expect the stock to be in the green on account of it.
Okay, thanks a lot for that. So that's on Aarti Pharma. Upasana is joining in to talk about some more stocks that are in the news this morning. Upasana, good morning.
Good morning. First up is Cochin Shipyard. The company has secured order in the range of 500 to 1,000 crores from a European client for construction of hybrid service operation vessel. Well, this project is expected to be completed by the end of 2026. Hence, I expect the stock to open in green today. Next up is RVNL. The company has received letter of acceptance worth 239 crores from Southern Railway, which is mainly for the provision of automatic block signalling system in the southern region. Next up is GE Shipping. I expect the stock to open in red as Nalanda India Equity Fund has sold almost 20 lakh crore shares for 950 per piece, and Hisalo Master Fund has bought almost 19.6 lakh shares at 950 rupees per share.
Okay, thanks a lot for that, Upasana, and thanks to our entire team. Here's a quick recap of our top stocks with positive news flow. There's JSPL, Shriram Finance, Vedanta, Zomato, Chalet Hotels, Aarti Pharma, Cochin Shipyard and RVNL, while stocks with negative news flow are DLF and GE Shipping. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, this is a street that is waiting for the U.S. inflation data to come. One is today, another tomorrow. So today is CPI and tomorrow is PPI. And ahead of that, there's a bit of a decline in dollar index, and that really seems to be supporting commodities, especially the metal prices, where we also are looking at supply concerns and long-term bullish demand trends. So you have the lead prices trading at a 24-week high, zinc at a 13-month highs, copper is holding around 2-year highs, and so is the case with tin, which is also trading at a 2-year highs right now. We also have seen the crude oil prices gain on signs of strong Chinese demand. Also, supply disruptions due to wildfires in West Canada is something that is keeping the market's prices in favor here. The only area that actually has seen some profit taking has been the precious metals. Gold and silver, both of these commodities have slipped ahead of the U.S. inflation data. But having said that, the markets are right now pricing a 67% probability of a rate cut in September. So it is going to be a choppy next 48 hours until we have the data in.
All right, Marisha, thanks very much for that. That's basically the global commodities picture.